Okay, it's time to talk about investing. And I probably won't talk about this too much, but just that now I think it's important because I strongly believe in Tesla for investment purposes. So that's what I'm going to be talking from that vantage point and kind of recommending. And I don't think it will ever be this low again. So now would be the time if you're going to consider such a thing. And I remember I said that a few months ago, and then the weird um, like around election time was at all-time highs, and then it dropped significantly, and so you just never know, because I wouldn't have predicted that back then, how much it would drop. But there's even more reasons now to think that it's not going to do that again, because we're just now at the pinnacle or the crux or whatever you want to say of two very um, new technologies, those being the autonomous driving and the robots. Both are going to be getting underway. The robotaxi eminently, and the robots within, or I mean, they're going to start now, but they'll really be vamping up like in next year. And so once that happens, there's no reason to think outside of a like disaster of some kind or whatever that the stocks would go lower than they are now, and every reason to believe they'll be significantly higher, because the whole focus of the company is changing. It's not shouldn't be thought of as a car company; it should be thought of as an AI company, um, and that will just become more and more apparent. And also, be sure to check out my recent video where I discussed tips and tricks that I use when on the internet, um, to make things a little easier when doing searches or just websites. And I gave a tip about on the Lyft app if you want to customize a shortcut on there to remember. To make it easier to type in somebody's location where you want to go, and talked a little bit about travel and Glide and what else, Ira and all that good stuff. So check that out. And um, so I'm going to be discussing some terms on here that I didn't discuss in my other videos on this topic. Um, and this could apply, of course, to anything that you're investing in. Any other, like I think some other good ones for this time are Nvidia. Um, and There's another one I was thinking of. I've heard rumors that Starlink might become its own company and become public, which I would love to invest in that, but I don't really have any extra dollars. But that would just be a really good startup that has great promise, because right now it's part of SpaceX. But if they did that, that would be very cool. Neuralink has another one with a lot of potential. Anyway, I'm a fan of long-term investing where it's not just your like steady, slow and steady wins the race, where you're like pretty much guaranteed that over like by the time you reach retirement or whatever, you can win. If you're like greedier than that or want your money to grow a lot faster than that, then you want to invest in disruptive technologies. So my nose keeps itching, but yet like there's something there, but yet nothing's there that I can tell. Anyway, um, but you want to get to know the company really well, especially if you're doing this yourself and not going through a broker or whatever, or have a financial advisor. If you're like independent, then you want to make sure that you have, I would suggest at least a 5 year horizon if you're going to invest in one of these really disruptive things, like where you're not really going to try not to touch your money or touch it as little as possible within the first 5 years. And even 5 to 10 years, I think, is what I'm like in it for. And I'll be taking out profits as we go, but as little as I can get away with because of course the more you leave in, the more that it will accumulate. And so but yeah, you have to really know the premise of the company, which is why I keep tabs on my investments like on a daily basis, where I just really want to make sure I know the direction it's headed and if any hiccups are happening and what to expect from that, how that will change the timeline of things and all that kind of stuff. But so like right now, Tesla is really expanding their compute and energy, as is everyone else in the AI arena, and it's just becoming more and more apparent that we're going to need more and more compute. The more we have, the more we need for right now. But of course, that will taper off eventually. But now it's the key is to find really good energy solutions like solar and um, just different nuclear and stuff like that. So anyway, the first terms I have here to discuss are technicals versus fundamentals. So, like technicals is basically, as I understand it, when the stock moves because of some psychological thing with the numbers we're at. Like, I guess there's a number coming up now, 363, that it's kind of been proven that when a stock gets to that point, it will kind of break out and go to the next level. And I don't really understand all of the workings behind it or the algorithms, but it's like been like proven or whatever that this happens more often than not. And uh, just a reminder here or a disclaimer: none of this is financial advice, and I've only known anything about investing for the last year. That's when I started to learn about it myself. So take anything I say with a grain of salt. But this is just some of the things I've gleaned. Um, so this technicals approach thing is kind of dealing more with the macro market. um, as I understand it, like in macro is the entire market, not just the companies you're invested in or whatever, but the overall economy and market. um, and the fundamentals is when the stock moves because of the company itself or um, like the story behind the company or the product itself and what is going on with it at the current time that's causing the stock to move. And sentiment is also part of this. Like, what do people, just the general retail investors, institutional investors, which are the bigger one, like bigger corporations and stuff, and financial agencies, and then the company or the public at large, all of those together would make up like the sentiment, like what do people think. And this is kind of independent of what is actually true or what is going on, but just if, even the people counting like that don't know that much, just what is the overall perception of how the company is doing and so on is kind of what sentiment involves. But then of course you can dig get make have a narrower focus and say what is the sentiment among like retail investors or whatever. And Then a V-shaped recovery is a sharp decline followed by a strong recovery, which is kind of what you would think of when you think of a V. And then another term is the Osborne effect, and there's another term that kind of means the same thing, which I wish I could remember, but it's when they don't want to talk about a new product very much um, because they're afraid that buyers will hold off buying the current inventory and will wait for this shiny new thing. So you don't want to do that. So, like, that would be one reason they wouldn't want to talk about a new car model or whatever too far in advance because they want to make sure they sell enough of their current product if they have excess of that on hand or whatever. And so another term you hear a lot is to buy the rumor and sell the news. So, like, a lot of times people will buy on what is coming, like they get all excited, like for the robo taxi upcoming, for example, the stock has been going up because people are anticipating that, but then after um that launches or whatever, then a lot of people start like take their profits because they're not sure what the next thing is to look forward to, so they want to kind of get some of their money now. um and then the market drops, so like after the big event, or if it doesn't meet your expectations or whatever, then they when it actually happens, it's not rumor anymore, then you're looking back at it as the news, what actually did happen, and then the market often goes down after. um that's why that term was invented, like buy the rumor and sell the news. So like shareholders will drive the price up by buying more as to what's coming. Um, and then afterward, when the story drops, they take their profits. So, um, like that's one of the reasons this for this company, it's there's so much volatility, like up and down, because so much is always happening. And that's because that's when you really have to have confidence in the backstory, or have confidence in your advisor, and do your own research too, and so that you can stay on an even keel regardless of what is going on from day to day. Um, and if the essential story behind the company isn't hasn't changed, like their goals might not always be exactly when they say they're going to meet them, but if they still have those same goals and are still working toward them, and you can see the progress that's being made, then you should stick with that company and not panic and not take your money out. Especially, it's so funny when people panic and sell when the stock has dropped, and that's exactly the opposite as what you should do. If you really have faith in the company, you should buy more when the market drops, because you're getting your shares at a lower rate, and then as you get more profit, then you should that's the time to sell some of it then. But that's like the opposite of what people do, or when the market goes up, then they, which I kind of did with Bitcoin. Like, I was scared to get into it. My brother was trying to tell me, um, but then like I saw how it dropped way down, so I'm thinking, no, I'm not going to get into it yet, because look at what happened to you. But he was confident, he had done enough research, he knew it was going to go back up. So then when it got to like 70,000, which was like all-time highs at that point, but then I thought, well, I better get in now though, because I think it's going to get a lot higher. So if you are pretty sure it's going to still get a lot higher, then it's okay to buy at all-time highs. If you still think you're going to get your money's worth, but it's just not the most ideal thing. It's the best thing is, which I kind of got lucky with my Tesla, because I bought it a year ago when it was in the like 140 or something like that. So I just got in at the perfect time for that, because I don't know if I would have had the heart if I had been in it since like 2018 or whatever, and it took this long to finally get what they were predicting way back then with this self-driving and stuff. But so yeah, you just really have to um, dig in and know, have your convictions, but yet be open minded too as to the real thing of what actually is going on and all the different opinions out there. Kind of weigh them and decide what is true and what you believe and are going to stick to, etc. Um, and so, when in doubt, zoom out. That's Cern Basher's advice. He's one of the people I listen to a lot on YouTube and such. And you have to like consider the economy and the current events, but yet don't give in to the FUD, which is fear, uncertainty, and doubt. You have to like see the big picture and ask yourself, are things still going where they should be, and not just what did Elon tweet today or whatever, or not tweet anymore, but what did he post, or what's the latest thing with the budget or whatever, which a lot of that does affect things like the taxes and the debt and all that is important to understand all that. So, but you have to separate the signal from the noise is another way I've heard it phrased a lot, which I think is really like, even though something might be loud and in your face and like, but is that really the important story? Is that just noise? So signal would be like what's the important stuff to think about. And Jeff Bezos has a quote that says, "The stock is not the company, and the company is not the stock." Um, so the stock is more what do people believe about the company, um, and so you have to see if you still believe in what is coming in the future. And the volatility is largely caused by short-term investors. Um, who aren't as informed or they just want to make a buck today, and like so they just a lot of times will deal with several different companies and they'll just look at they don't really know anything about any of them, but they just look at their spreadsheets like what is the stock doing right now. Okay, if it's going up, I'm going to predict that it's going to go up a little bit more. But doing that more short term stuff is really risky because nobody really knows what's going to happen over a shorter time horizon. But the longer you go, the more predictable it is. And so, like, some people have leaps where they predict, like, by next year, I predict that we're going to be higher than we are now or whatever. So that is, even though it's still shorter term, it's not just your day to day, like what is the stock market or minute to minute. Sometimes people just kind of go by what's happening right now, which I would never do because that's more like gambling and like luck or whatever. It's not really based on anything. Um, and so like some people they'll follow the market and wish they had gotten in when the price was lower when things are good. But so then some people are afraid to get in because they're going to wait for it to drop, but then it might not ever drop again. So then they've waited too long. um, and then when it does drop they might be scared that it's going to drop too much, so then they still won't get in and invest because they're afraid it's going to drop even more. So yeah, you just can't be too, you have to like have a thick skin and not be affected by the moment to moment, which um I've said that a lot of times in this video, so hopefully you get the point of what I'm getting at. And um then there's buying on margin, which is another very risky thing that I would not recommend either, where people actually borrow money like from their stocks or current investments to buy more. um and I know that can be kind of tempting at times if things are really going up and you want to get the most. But it's just that the potential for what you could lose if things go south is too great, in my opinion. Um, and then there's this term having a paper hand, which is when you sell your stocks when the market drops, and which is the opposite of what you should do. And then um, a diamond hand is somebody who holds on to the stock in spite of risks. A risk on environment is when people are willing to take risks. So the economy is good and thriving, so you're willing to um, like invest more. And of course, risk off is like what we had a couple months ago when everything was uncertain with tariffs and whatnot, and things are still kind of uncertain in that regard, but not as much as they were when nobody really know what was going to happen from day to day. So you really need stability so that people feel confident to put their dollars somewhere like this. Otherwise, they're just going to hold on to their cash and lay low until the economy does become more stable and more predictable. Um, so a soft landing is when prices are kind of flat, or like in a growing market, they gradually just slow down a little bit, but don't. don't go negative. They kind of just level out. Um, and so um, yeah, I think that's kind of all I wanted to say. I wanted to make this a little bit on the shorter side. But like analysts, where I just wanted to give an example here of how sometimes things go. Like analysts have been predicting since January 29 that sales would be really low the in the earnings call. It wouldn't look that great on paper. But if you look deeper behind the story, you realize that in part, I mean, yes, there was some brand damage because of all the Doge and all the political stuff. Um, but the main thing as far as the stock market was just that they were they're going to a whole new model, their Model Y, and so the inventory, um, they would be closing factories for several weeks to get all that ready. But reporters totally ignored that aspect and only said, "Oh, uh, Tesla's about to go bankrupt because of the political thing or whatever, or they don't have anyone in charge anymore." And they've kind of lost their way or whatever. But if you had been deep into the story like I was, you knew, you were expecting it ahead of time. Okay, this next earnings call isn't going to look good because of they're not selling nearly as many cars, and like I said, that's also because they're transitioning to a um, AI company and their robo taxis and all that kind of thing. And they don't keep nearly as many cars in inventory, like they don't have as big of a backlog as other auto companies do. So you just have to think of all that stuff. And that's just some examples from my personal the company that I'm invested in, but you can apply a lot of these principles to other companies as well. So let me know what you think. I always appreciate your feedback, and please do like. That really helps. If all you do is just hit the like button, or if you're not subscribed already, please subscribe to my channel. That really helps my videos to be given to more people so more people can see them. And I with that, I'll say goodbye till next time.